Hi, I'm Keith Quinn, the Director of Investments at Shoemaker Financial with an economic update for February 2017. In this month's update, we'll touch on some of the major economic news that influenced the markets in the last month, and hopefully we can give you some insight into what that could mean for you as an investor. First, let's take a second and think back to where we were at this time last year. We just had the worst first 6 weeks in the markets ever, with both the Dow Jones Industrial Average and the S&P 500 dropping more than 10%. But this year we're off to a totally different start. After a great post-election bounce, the market started off the year trading somewhat sideways as investors were looking for more specifics about the president's policy agenda. However, a comment from President Trump about the phenomenal tax plan he's going to announce seemed to reignite the optimism we were feeling after the election and propelled the markets on the new highs. And as we were hitting new highs, the S&P 500 also reached a historic milestone, with the market cap of the index topping $20 trillion for the first time ever. Now, this hasn't just been about optimism. The economic news has been pretty good as well. The latest employment report showed that the economy added 227,000 jobs in January, which was far better than the 187,000 jobs per month we averaged in 2016. Average hourly earnings were also up, but they only grew at 0.1%. And when you couple that with the unemployment rate ticking up to 4.8%, it may mean that there's still some slack in the labor market, and we may not be as close to full employment as we initially thought, which could give the Fed some cover to hold off on raising rates at the next meeting in March, even though some of the recent inflation numbers have been coming in a little hot. On the consumer side, spending's also been good. Retail sales grew 0.4% in January, which is a great number considering that January and February are typically two of our slowest months. Plus, the December number was also revised higher to 1%, and that's a good number for the holiday season. On the earnings front, those numbers also look pretty good. As of February 17th, with 82% of the companies in the S&P 500 reporting, the blended earnings growth rate for the fourth quarter is right at 4.6%. And this will mark the first time we've had 2 consecutive quarters of earnings growth since the beginning of 2015. But despite all the positive data, the economy still isn't growing as fast as we'd like. The first estimate of fourth quarter GDP growth came in at 1.9%, which was pretty disappointing after the economy grew at 3.5% in the third quarter. But if we dig a little deeper, there were lots of areas like household purchases, business equipment spending, and inventory accumulation that had a really good quarter. The main drag on growth came from net exports, which pulled down the headline number by a full 1.7 percentage points. And that's the biggest hit we've taken from exports since 2010. But that also highlights how important trade is to our economy, and how any change in the balance between imports and exports can have an outsized impact on growth. And that's also why we're paying very close attention to any tax reform legislation that has a tax on imports, or to any legislation that could affect our trade with other countries. So to sum it all up, there's still lots of unknowns, but the economic fundamentals look good, and there are definitely reasons to be optimistic about the direction of the economy and the markets. But as always, let's try to tune out the noise, even when it's really good noise, and try to keep our focus on the long term and achieving our long-term financial goals. Well, that's it for this month's update, and please remember that nothing we talk about here should be taken as a recommendation. If you would like to discuss your personal financial situation in more detail, please don't hesitate to reach out to your advisor, or you can always give our office a call at 1-800-757-1059. Until next time, I'm Keith Quinn for Shoemaker Financial, wishing you continued peace and prosperity.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. This material represents an assessment of the market environment at a specific point in time and is not intended to be a forecast of future events or a guarantee of future results. The S&P 500 index is an unmanaged index generally representative of the U.S. stock market. The Dow Jones Industrial Average is a widely followed measurement of the stock market. The average is comprised of 30 stocks that represent leading companies in major industries. These stocks, widely held by both individual and institutional investors, are considered to be all blue-chip companies. The NASDAQ Composite is a market value weighted index of all common stocks listed on the NASDAQ exchange and is comprised primarily of technology stocks. It is not possible to invest directly in an index. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Past performance is not indicative of future results. This material has been provided through the research of Platinum Advisor. Keith Quinn is a registered representative and investment advisor representative of Securian Financial Services Incorporated, securities dealer member FINRA SIPC, a registered investment advisor. Shoemaker Financial is independently owned and operated.